So what chance is there of an intervention by the Bank of Japan? Let's ask my next guest. He's Adam Cole, Global Head of Foreign Exchange Strategy at RBC Capital Markets. Adam, thank you so much for joining us. Now, you put this chance at 23% that it will actually intervene. How do you come up with that figure?
That's basically going back and looking at the Bank of Japan's previous behaviour on the criteria such as the degree to which the yen has been strengthening and some macroeconomic factors, the depth of deflation and measures of business confidence. And on that basis, we put the risk of Bank of Japan intervention currently at about 1 in 4, as you say. Now,
you're still actually very bullish on the yen. What kind of levels are we going to touch?
Well, I am bullish on the yen, but I'd rather play that in terms of euro yen than dollar yen. Problem with selling dollar yen is that you need to be outright bearish on the dollar, and we're not at the moment. So my target for euro yen would that we will see that trading materially below 100. But for dollar yen, I suspect we're probably reaching a floor around the 85 level.
Adam, is there a level where actually the Bank of Japan can't afford not to intervene? If it's now at a 23% chance, what kind of level do we need to see to be, to have a 50% chance, a 60% chance?
I think it probably depends on more on the pace of appreciation than the outright level. If we were to see dollar yen and euro yen trading 1, 2, 3 big figures lower a day for several days in succession, then that risk would rise materially. What I would say, however, is if you look back at the last year, then on the Bank of Japan's own past behaviour, they should have been intervening around September, October of 2009. The fact that they didn't, to me, is evidence that we have seen a shift in regime in Japan after the change of government in the summer of last year. So I think that the threshold for intervention probably has materially risen.
How much of a concern is it actually for growth and for exports that we're seeing these very high levels for the yen?
Well, clearly it's not helpful that the yen is appreciating, but another point I'd make really is that the strength of the yen is very much overstated by looking at dollar yen in isolation. If you look at the yen against a broad range of currencies, and particularly so in real terms, then the yen is not particularly strong at the moment. In fact, we're about 10% below its 20-year average. So clearly, rapid appreciation of the yen is unhelpful, but in outright levels terms, I suspect that Japanese industry still looks quite competitive at these levels.
Adam, how difficult is it actually to navigate the currency markets at the moment? I mean, we have a fairly uncertain view about where the world economy is going. Risk appetite doesn't seem to be returning on the markets. When can it return?
That indeed is very much spilling over into foreign exchange markets, and one of the great difficulties in FX is finding ideas that aren't simply a reflection of this notion of risk appetite. The yen is a prime example. It's very difficult to take a positive view on the yen unless you take a negative view on risk, and looking at the range of currency pairs which are trading independently of stocks, that has very much narrowed in again through the course of this year, and there is a very limited range of currency pairs that you can pick that aren't a surrogate view on whether equities go up or down. So a great deal of care is needed in picking currency trades that reflect fundamentals rather than just reflecting the direction of equities.
Adam, we only have 15 seconds. Give me some of your 3 top picks.
Short euro yen, we like long Canada versus the other commodity currencies, and we like long Norway versus short Sweden.
Adam Cole, thank you so much. Adam Cole there from RBC Capital Markets. Well,